We learned the Federal Reserve has unveiled details of its $2.3 trillion program to help small businesses and others in support of the overall economy. And as a result, we have stock futures rallying, Dow futures up better than 200 points right now. I want to get right to Brian Cheung for this Fed news this morning. Brian, did this come as a surprise to you? And what is exactly in this $2.3 trillion program?
Yeah, well, the big announcement was really the addition of their municipal debt plans to buy more debt directly from states and local governments, in addition to expanding their existing facilities to take on some commercial mortgage-backed securities and some high-yield stuff, including collateralized loan obligations. But you're referring probably to the part where we heard about the Fed wanting to launch its Main Street lending program, in addition to trying to backstop those Paycheck Protection Program loans that the Treasury, in conjunction with U.S. banks, have been trying to disperse since last Friday. So the Federal Reserve now offering more details on that. In sum, all of these facilities would provide $2.3 trillion to the economy. That's what the Federal Reserve estimates. You had Jerome Powell issuing that statement earlier this morning saying the Fed's role is to provide as much relief and stability as we can during this period. Again, one of those things that it's doing that's relatively unprecedented is by going out there and directly buying municipal debt, not in the form of quantitative easing. This is going to be through a special purpose vehicle, which the Federal Reserve has used for its other liquidity facilities as well. The way it works is that the Fed works with the Treasury to set up a separate entity that then goes into the open market and then buys these types of securities. The Fed does the purchases, but the Treasury ultimately backstopping it with either credit protection or with equity that's provided to back up that facility. So the numbers on this are also new. So the Federal Reserve saying that it's a Main Street lending program, which it'll lend 4-year loans of a minimum of $1 million to businesses. That's actually going to be $600 billion. That's going to have $75 billion of backing from the U.S. Treasury. And then something else that's also worth mentioning is, again, the expansion of those programs that it was already doing to buy investment grade debt. They call that the primary, secondary market corporate credit facilities. That has been expanded to support $850 billion in credit. For those that are wondering, does the Fed have the authority legally to do this? The answer is yes. So they have authorities under what they call Section 13.3 of the Federal Reserve Act to provide lending when it's due. They can't necessarily buy everything directly on the balance sheet, but they were authorized about $454 billion to provide these liquidity facilities through the congressionally passed CARES Act from 2 weeks ago. Alexis?
You know, Brian, what does this mean, the fact that the Fed's now going to be taking on unprecedented amounts of high yield debt? What does it mean for the companies that hold that debt? Are they basically just kicking the can down the road for those companies, and at some point it's going to come to roost?
Well, it's important to understand the mechanics of all of this. So the Federal Reserve is buying the debt, but it's doing, again, through that special purpose vehicle, and it's taking it on as collateral through what they call their term asset-backed lending facility. Now, what that does is basically it takes on the collateral temporarily and provides cash infusions to any sort of broker dealers or banks that are holding on to those leveraged loans or to those types of securities that they can't ultimately liquidate in the market because things are dried up so much. So it's not necessarily the Fed taking on permanently these positions, but it does raise the question of, is the Federal Reserve artificially inflating a lot of these already junk-rated companies that were already troubled before the coronavirus? So this is, I guess, just another question that will kind of be part of the overarching long-term, I guess, viability of the Fed's actions now. For what it's worth, the Fed doesn't seem too concerned with worrying about that type of stigma. It's been going through these types of programs, announcing them aggressively because it wants to message to the public that monetary policy is going to do exactly whatever it can do to try to stop the bleeding from the coronavirus.
Yeah, just when we thought the Fed might be out of ammunition, they come out with this. All right, Brian Cheung, thanks for breaking it down for us.
Hey, investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.